Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. We're going to start with the euro against the dollar. An indecisive spinning top yesterday, though not a great one to be sure. You could also see it as a possible bullish harami, but it looks a weak one if it is. It was nevertheless a new low for the market, one not seen since November last year. However, the most important feature of yesterday was the market finally reaching target X1 in the 117.05 area. That's the initial target for the bear flag formed over late February till today. We still have target X2 in the 116.15 area as the final target for this particular move lower. I've mentioned in earlier videos that we have below the old neckline from the August to September 2020 continuation head and shoulders pattern, currently at 117.18. Now, I suspected the neckline was not that good as support. Well, it seems to have been good enough this week to halt the move lower so far. This is one to watch. Further down we have the lesser Fibonacci level at 116.94 and the lower tine of the 2021 bearish Andrews pitchfork, currently at 116.09. Then there's a significant longer term continuation lower diamond trend line. That's from the December 2019 to May 2020 super diamond pattern, currently at 116.16. Worth paying close attention to this lower trend line, as the upper trend line halted the rise back in all of the following: July, August, September and December last year, and January this year. Meanwhile, topside we have the important 50% Fibonacci line of the June 2020 to January 2021 move at 117.58. And then the significant June 2018 high at 118.51, with the middle tine of the 2021 bearish Andrews pitchfork currently at 118.17 in between. So far today, test down below the old neckline, but then a pull back up, still under the 50% Fibonacci level at 117.58. Cable, aka sterling against the US dollar. A bullish engulfing pattern yesterday, but as it was immediately after an indecisive spinning top, I suppose it wasn't the hardest of things to achieve. Overhead we still have the short medium moving average currently at 138.27 and the close line, that is the broken November 2020 to March 2021 uptrend, currently at 138.66. Below we have the familiar congestion zone 136.5 to 137.5 from January and February, which now has the rising medium moving average currently at 136.56 within it. Further down we have the supremely important lower time currently at 136.03 of the June to September 2020 bullish shift pitchfork. This along with the middle time above, which is at 140.49, have given the bullish angle of attack of the market since September last year. Finally, I've drawn a new uptrend from November last year, currently at 137.06. I will see how this develops. So far today, not much. A dip, then a recovery, though still a little lower. But that is all. Not really a follow-on to yesterday's bullish engulfing pattern, I'd say. Euro sterling. All still quite tense here and interesting as well. A new low and low close yesterday. That's not been seen since February last year. However, the new low was only by a little. It was nevertheless the second consecutive clear close below the recent descending triangle pattern. Meanwhile, we'll still have two of the three original targets below, and that's target X1 in the 84.75 area, the target for the recent sideways triangle, and target X3 in the 84.5 area for the descending triangle pattern itself. Now I've left target X4 above on my chart, the target for a possible break upwards of the descending triangle. This is in the 87.15 area. The reason why? Well, if there's one thing I've learned about patterns, is never underestimate the chances for another false break. So far today, a halt at yesterday's low once more, and a little move higher, seemingly trying to match yesterday's range right now. US dollar against the Indian rupee. A bearish harami yesterday, a response to the previous session's bullish opening white Mariposa that achieved the preliminary topside target X2 for the recent falling wedge pattern in the 7260 area. Yesterday's action also was hung from the same 7260 area and could be seen as a possible pipe top, though we'll have to wait for a few days to make sure of that. The other interesting feature of yesterday's action was the close back down below the medium moving average, currently 73.20. This goes a little to support the idea of the pipe top and maybe even a tweezer top. All this may become evident soon, or not. I should also point out this time that despite two breaches of the upper time, currently at 73.49 of the October 2020 to February 2021 bearish Andrews Pitchfork, we still haven't closed over it. So far today, a seeming immediate countering bullish harami right now. The market is back up over the medium moving average, but seemingly halting ahead of the upper time. US dollar against the Brazilian real. Bearish opening long black Mariposa yesterday. This after the indecision seen in the previous two sessions at the combination of the rising middle time, currently at 582.15 of the recent mid-January, mid-March bullish Andrews Pitchfork, and the old October 2020 high at 580.70. The drop closed below the very recent 50% Fibonacci line at 566.34, though did not approach the rising lower time, currently at 555.42, nor actually the flat upper base of in the 551.5 area of the recent ascending triangle pattern. All this has left a possible double top pattern above an Adam and Adam type, though it could be seen in some light as a possible horn top. We'll see over the next few days and see what they bring. US dollar against the Mexican peso. A fifth bearish black crow yesterday, but what was important was we saw the first close below the 2021 uptrend, currently at 2049.11, and a penetration, though not a close yet, under the rising short medium moving average. That's currently at 2042.32. This all contributes to the idea we may have of a sloping head and shoulders top formed over this year so far. The uptrend could stand as a proxy for the neckline, but it looks a little too steep for my liking at the moment, but it'll do until a better one shows up. By the way, I say top, but it could also still be a continuation pattern. That's a discussion for another day. So far today, a test up to the broken uptrend, but since then, a move back down below the short medium moving average once again. Below we have the flatlining medium moving average, currently at 20.21.48. Not the best shape for a moving average to adopt in the current circumstances. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.